So what is a SPAC? Are they good to invest in? Should you invest in them, or should you avoid them like an old friend from high school? Well, these SPAC stocks have been all the rage lately. A lot of people have made bank on them, and well, I think a lot of people recently have been losing their arses on them.
I've got nothing left. I've got nothing left.
So what is a SPAC? Let's find out. But of course, first, this is not financial advice. I'm just a guy with a beard trying to save the world, so please do your own due diligence before you make any investment decision. If you are new here, please do consider subscribing and turning on the bell. If you want to support the channel, please do throw a like down there. It would massively help me out with the YouTube gods. If you want to support even further, there's a Patreon link down in the description where you can get some exclusive perks, including a WhatsApp group and a chat room. But if you want the chat room for free, you can sign up on eToro via the pinned comment, and then you get the chat room free for absolute life once you've made a trade. So SPAC stocks, like I said, are all the rage lately. A lot of people have made a hell of a lot of money, and recently, well, a lot of people have lost their arses and probably are quite upset with some of the SPAC advice they've been getting on YouTube. SPAC stands for Special Purpose Acquisition Corporation, or a Special Purpose Acquisition Company, depending on which book you read. Now, in a nutshell, that's exactly what it is, a nutshell or a shell company. And what I mean by that is it's a company that literally has nothing to offer, doesn't have a product, has no assets. It's just a company listed on the stock market. Now, they get listed with the intention of trying to be acquired or merge in the first 2 years of their listing. Now, why would this be popular? Well, let's say you have a company like, I don't know, Virgin Galactic, a company that's got lots of debt and a lot of hoops to jump through when they want to be listed on the stock market. But the reason companies do get listed on the stock market, if you didn't know this, is to raise money so that they can reinvest or pay off debt. And the way that works is, let's say Virgin Galactic got listed as an IPO, a normal way of listing, and then they sold 1 million shares on the marketplace to people like me and you for, let's say, $10. Well, that's 1 million times $10. That means Virgin Galactic just literally get 10 million US dollars. They can then offer another million down the line at a different price and keep raising money. That's why companies do get listed on the stock market. It's not out of the goodness of their hearts, trust me on that. So coming back to the original scenario, you've got a shell company here and you've got Virgin Galactic here, right? And Virgin Galactic is going to have to jump through loads of hoops because they've never turned over a profit. Their business is pretty much speculation, and it's an absolute ball ache to get listed as an IPO. Reasoning being, it's very expensive. How do you value a company that's actually not turning over a profit? You don't know what their product is. And you've got companies like Morgan Stanley, Goldman Sachs, companies who are going to help list you on the stock market, diving into your financials, asking questions you really don't know the answer to yet. So it can be quite confusing. Another option is Virgin Galactic merges with this SPAC company or company A. They merge together and they become one company. That's the whole purpose of a SPAC. Now you might be asking, well, what's in it for the SPAC? Well, there's many reasons for it. A SPAC typically, when it gets listed, has a group or a board of directors or founders, and these people are usually people with a good business background. Chamath Palihapitiya is a recent one, for example, who's done a lot of SPACs. They come in and people buy into their dream. They believe these people are going to go and get an acquisition with a bigger company, and that can drive the stock price up, and that's why people basically buy the SPACs. Now, what's in it for Chamath himself? Well, he obviously holds a lot of the initial shares, which he can get at $10, which is what SPACs are usually priced at initially, or he can even get them lower. He can get them at 1 cent a share. So these directors for sure are not in it to help me and you either. They're in it for themselves. That's what people do in business in general. They're there to help raise their own bank accounts. So looking at it itself, SPACs can be very, very dangerous, but also very, very profitable if you merge with the right company. Now, typically what happens once a SPAC is listed, it usually stays around a $10 mark, and then the rumors start coming out about possible mergers. Now, if a merger does happen, then of course the ticker's going to change. The price can change because then you're going to start seeing the filings of the new company that's merged with it. In this case, as an example, Virgin Galactic. They then now have to Virgin Galactic report all of their filings, and you get to see a better look inside the company. And that can usually kill the stock price. And we've seen that with Virgin Galactic. We've seen that with companies like Nikola. And there is a few exceptions. I mean, DraftKings did, well, quite okay, I think. Now, what happens if this company never finds a Virgin Galactic? Well, after 18 or 24 months, if it doesn't look like anything's going to happen, of course, these board members are going to get quite bored and they're going to dissolve the company, and me and you as an investor will get back a sort of sum of money depending on how many shares you have and what the current price is, along with other factors of dissolving the company. Usually this would come in at a loss. You wouldn't get back what you initially paid because the stock price would probably be suffering as the dissolving news comes out. So because of this risk, you can't just go and buy every single SPAC out there thinking that they're all going to merge eventually, stay around $10 because they have no risk, no assets, and then, you know, once the merger happens, they should go to the moon, cash out, everyone's a winner. Because if that was the case, we'd all be billionaires. But if you find the right SPAC, is it worth investing in? Well, it depends where you sort of find it. I have invested in SPACs in the past. I'm currently in one still, and that was actually no secret. It's SRAC, which is merging with a space company called MNTS. I'm not in it with massive size in terms of my portfolio either. But for me, I got in very, very early. I actually doubled my money and some at one point, and like an idiot, I didn't even buy any more. But luckily I didn't size in either at the top, so my average is still very, very good. I bought some more recently, and I'm not buying this because it's a SPAC. I'm buying into the momentous space argument on this ticker. But either way, I am completely fine with losing every single penny on this ticker. It's a speculation play, and I think a lot of people are moving into SPACs without understanding that they are, after all, speculation plays and very, very high risk. If you wanted my advice, and that of course would not be financial advice, but if you do not have like at least 5 years experience in the stock market and you are still quite a novice investor, I just avoid SPACs at all, to be honest. I just avoid SPACs in general, all of them, every single one of them, because they can be very, very dangerous. And we've seen that with Nikola and things like that. And the other con with SPACs is once they actually happen, you get to look inside that company. So think about it logically. Company A has been clean as a whistle. It's had no debt, it's had no assets. It's just a clean company waiting to be merged. Then comes in Virgin Galactic or, you know, Nikola, for example. This company, which is clearly in desperate need to raise capital, that's why they're getting listed, gets listed on the stock market. Now, most of these companies are not profitable and they don't have a lot of funds. And if we look at Nikola, it was just a complete fraud. So once they're sort of merged, you can then dive into their filings, find out every single angle from this company, and find out that Nikola was actually just pushing trucks down hills to look like they had an actual vehicle. So there is a lot of speculation out there, and you should be very, very careful with SPACs. That said, I do think you can get good opportunities at certain points, but if you were buying a SPAC before the merger, I'd just be very careful and make sure you have a solid risk level. Now, if I still didn't do a good enough job explaining SPACs, let me know down in the comments any questions you have. I'll be happy to try and answer them. Again, I am definitely not a SPAC king, but I know enough about them to probably give some helpful advice here. So one last time, in simple terms, a SPAC stock is a dormant shell company that is hoping to merge with a big company, and then everybody can live happily ever after. But the losers in this fairy tale usually are the retail investors. So with that said, be very, very safe out there. Make sure that like button is turned blue, and I'll see you in the next one. Take care. Peace.